This meeting is being live streamed, gentlemen. What's up, everybody? It is Value After Hours. It's 10:30 a.m. It's 2023.
Season
Billy
5.
Brewster. Season 5? That's nuts.
I think that's right.
And Jake Taylor.
Can it be that long? I don't know that it's that long. I think maybe it's season 4.
I'm pretty sure.
Well,
Who
I think
cares?
we
Calendar
kicked
year,
off
right?
in Thanksgiving. So it's probably like 3 years and whatever that is, a month.
Yeah. Roger that. I'll go with that.
Well, whatever. It's good
Alright.
to be back. I missed you guys. I missed the 10.
Yeah. Shout out
too.
to the 10.
Hope you guys had a good Christmas break.
Dude, Townsville is always the first in the house. It's crazy. Who knew Townsville was so full of like whatever we are, value guys?
Yeah, it's
What's
like
up?
Graham and Doddsville.
Samson's back from Dubai. Danny, Jamaica. Lytham, UK. This is cool.
TC, how was your trip to the other side of the world?
Awesome. Great to go back to Oz. We ended up just spending most of it with my family because my kids hadn't seen their cousins and needed to reconnect with the grandparents. My little fellow was 3 months last time he went, so he's 5 years and 3 months this time.
Whew.
So that was cool. So they loved played with the cousins a lot. It was awesome.
Yeah,
Nice.
that's good stuff.
Yeah, it was great. Good to reconnect. Good to be back in Oz. Drank
Wholesome.
so much coffee.
Did you?
Australian coffee is the best in the world. Sorry to all of the Italians or whoever invented it, but it's the best.
I don't think this is factual.
This is the case. If you go to New York City and you find an Aussie coffee shop in New York City, that's how you know it's the good one.
New
Okay.
York City.
And LA as well. Oh, someone's given us the coordinates. Gonna phone in a bombing run.
Oh boy.
And we're demonetized.
Oh, that's right. I forgot about that. Santa Monica.
Can't take what we
Athens,
don't
Greece,
get.
3 minutes in.
Canada, Sydney. Sydney's in. What up? It's very
How about
cool.
you, Billy? What'd you do over the break?
Oh, I don't know. I contemplated life.
Deep.
Yeah.
What'd you
get a
discover?
resolution?
Yeah. What's the
I
answer?
don't know. I don't know. I think a lot of this is just useless. I like hanging out with you guys, but watching my grandma decline has put a lot of stuff in perspective. And I don't know, like by far the best move that I made last year was I sold a bunch of stuff in her portfolio in March of 2022. And like arguably the best timing I can possibly have. And I came out 4% positive after tax. So how often is that a good move? Makes me just think a lot of this brain power is totally useless. There are a lot of other outcomes where that didn't come out that smart, and I end up behind. And I don't know, just spent time with family, and it's been rough, man. I called hospice in. I didn't know if she'd be ready for that. They
Whoa.
said she wasn't, but it has not been the easiest time off.
Sorry to hear that, Matt. It's not
Yeah, it's a bummer.
It sucks. And then on top of that, you got like family money dynamics, and people are kind of wondering if she'll croak because then trusts get distributed. It's not fun over here in that realm of life. However, we can talk about factor betting.
Ooh, smooth segue.
Yeah.
What about you, JT?
Yeah, kept it small, stayed home, family. Nothing real major going on. Just was happy to not be traveling and stuck in an airport for 4 days or whatever that seemed to happen to a lot of people.
Yeah, that traveling that's wild, man. We missed the connection. 6 hours. That's not so bad, but
What'd you fly? Qantas?
Qantas.
Yeah.
Not many
Gotta
choices
fly
to Oz at the
Qantas in
moment.
Australia. Yeah.
Virgin was excellent. Virgin was the best, but Virgin's gone.
Mm.
It's a shame.
Thanks, COVID. Virgin probably took a vaccine.
It's
Dropped dead.
Oh,
Now
definitely
we're
demonetized. Oh man.
What have we got on deck? I think we should do predictions for this year.
I think we should just keep saying outlandish stuff and see how
This-
many people we can make mad.
This was Jake's suggestion that we do we do predictions for the year. And I think it's a good one because predictions are really fun. And then you can go back to them at the end of the year and see how wrong you were.
But
Yes.
I know that I'm going to be wrong.
Well, then pick the right answer. Stop being wrong.
That's it.
Oh.
That's it.
Noted.
Don't be wrong.
Noted.
Just stop being wrong. That's the motto for 2023.
That would be a lot easier.
Do anybody want to take it away? Anyone want to have a shot with that? Let's talk about, we can
Let me-
break it down a little bit.
Yeah. Let me let's do the full.
Give us some ground rules.
Yeah. So
yeah,
this
let
is
us know. Let us know what's going on, Jake. Come on, talk to us.
all right. So before we do that, let's do a quick happy birthday to Charlie Munger turning 99 last
Wow.
week.
The
What a
real
legend.
OG
What a
Wow.
legend.
finds a guy that wants to work really hard and rides his coattails. The smartest person in the room by far.
Damn.
What a
True.
legend. Okay, so with that out of the way, happy birthday, Charlie. So this is inspired by Jason Zweig had a recent write-up that he called his hindsight bias buster quiz. And every year Jason will he'll run this end of year quiz, and basically the intention behind it is to record your estimates of some key asset classes and just see how do your predictions pan out. And Jason points out that how regularly we fool ourselves, and often what we know alters our perception of what we think we knew a year ago, right? And that's what psychologists call hindsight bias. And so there's a lot of things, like I'm going to give you a quote about what Jason said in this, that because I think it sums it up nicely. The meaning of the present is almost always hidden until it becomes the past, at which point you can't reconstruct your earlier state of ignorance. That makes it all too easy to fool yourself into thinking that you knew what would happen all along, which in turn can delude you into thinking now that you know what will happen next. So, we're basically just sort of like meandering through life with one hindsight bias crashing into another. But what's fun about this is we'll record our predictions, and then that way we'll circle back from them and we'll see how dumb we were. And I had my guys at Journalytic create a checklist for this, for Jason's hindsight bias, just to make it easy to record all of your answers. And then you can add a 1 year out reminder to that journal entry, and then it'll serve it up to you in a year, and you can check on your own hindsight bias if you want to get in there and do that. So, and if you happen to do that and you want to like screen cap it and post it publicly, that could be fun. And actually in the article, Jason said to send him your entries at intelligentinvestor at WSJ.com. So he asked people to send them his entries. And if you wanted to, you don't have to, but you can CC hello@journalytic.com just for fun, just because we like to keep track of that.
Tag us on Twitter too, because there's little tools on Twitter that'll let us look back in a year as well.
Yeah. So we have, there are a number of questions here, and we'll take them one at a time, and I'll give you a little bit of like reference points for each one. So the first one is, what will the closing value of the Dow Jones Industrial Average be in 1 year? And currently it's at 33,500, let's call it.
This is a little more specific than I was planning. Let me think. Can I look up where it is now? Where is it now?
33,500.
We just told you, bro.
Mate, I've got goldfish memory.
Oh, boy.
33,000 times 1.09
0.67
equals. I'm going to go 36,000.
All right. Toby's going 36,000. Bill?
Ooh, I don't know.
Actually, that was dumb. You want the extremes. You want to go a double or a half.
Oh, I think
No, pick what you really think it's going to be.
I don't know. The thing is,
Stick them in the comments, dudes. We can come back to this later. And
I'm going
see who was
down.
right.
What's down 7%?
All right. I'll just write that and we'll calculate it later. All right.
I typed in 33,000.
It's like, let's go like, I don't know. Go like 312. What is it? 33,000. So say 31,200.
All right. Final answer.
Brian asks.
Yeah, I mean, I'm late
rules.
on this.
What does
It's
that mean?
already
Can't go
bouncing.
over.
Yeah. Price is Right rules. No, this is closest. There's not Price is Right.
$1.
All right. What will be the total return of the S&P 500 over the next year?
So just before you move on, somebody said the Dow Jones is a garbage index, and I completely agree. It's so weird. Like 30 companies, 33 companies.
Stop being a hater. Price
But
weighted
just
is
wait,
the
just
only
wait.
way to do things. Everyone knows this.
But I completely agree that's such a silly way of constructing the index, but it does show how hard it is, not just to outperform, but to deviate from an index. Like if you set out at the start of the year thinking, I'm not going to do what the index does, have a look at what the S&P 500 looks like compared to the Dow. Like they're virtually indistinguishable in terms of returns over the very long term. It's kind of like, that's one of the things I wrote about in concentrated investing was how hard it was to deviate. Like just randomly selecting 30 stocks gets you N30, which is about statistically significant number. Price weighting, which is crazy, still tracks the S&P 500. Doesn't make any sense. Like to actually deviate your performance, you have to do something radically different in your portfolio, even trying to underperform. Sorry, dude.
Yeah, that's
Off
a
you
good
go.
observation. All right, S&P 500 over the next year.
Well, for logical consistency, I have to go like 9% on
Plus 9%.
plus 9, which is my calculation for,
All right,
for Dow.
Bill, what do you got?
I gotta go like down 7.
All right.
Can we do inter-year marks too? Because I kind of think there's going to be a big crash too.
It's too much work.
We can discuss it. We can return.
Yeah. All right. What will be the yield on the 10-year U.S. Treasury note in 1 year?
Ooh,
Currently at 3.6. Call it.
That is a tough one.
Yeah, that could go a lot of different directions, huh?
Hang on, I gotta hang on.
To what extent does the 10-year reflect the will of the people, and to what extent does it reflect the Fed?
Everything is Fed manipulated. Always and always. I'm gonna go 2.5.
All right.
Well, I'll get 6.
Coming down. All right. Going the other direction. That's what I like.
That you like how I think that the stock market's going to go down and the 10 years is going to go down. Yeah, that's a great prediction.
So somebody, well, look at mine. I've got 9% on the 9% of the index and then 6% on the. That makes no sense either.
Yeah, you and I we need to get in
different
different camps.
But then again, we've had each way bets too, so there's something.
We've
hedged ourselves.
Yes, that's right. The key is to throw enough stuff out there that we can say
Hedge.
we're correct no matter what.
That's right.
40% certainty.
We're in the media game, folks. That's the game.
What will be the annual rate of inflation in 1 year? Currently 7.1 for the CPI.
3.2.
Negative.
I like that.
Well,
It'd be tough to get a 6 handle on the 10-year with negative inflation, but I like it.
You are really,
I like it.
All right, give me a number though to put in here. It's like -1 or something.
Yeah, I'll just give me below 0, -0.1, and then I get everything
below that. Okay. I'm not sure I agree with that, but it's fine.
It's
all right.
madness.
What will be the price of Bitcoin in 1 year? It's currently $17,350.
See, that's a hard one, as opposed to the other ones.
Yeah, the other ones are easy. This is hard.
Bitcoin. Yeah, that slides around a lot, doesn't it? Like you could say 1/10 or 10 times, and that would be the range. So I'll go 1/10, $1,700. Go 2,000. 2,000.
Wow, that's a big haircut. All right. What about you? What do you think, Bill?
I don't know, 25,000.
Whoa.
Down, yeah, totally plucked out of random numbers. I assign 0% confidence interval to that, by the way.
It has been surprising to me that with this, all the SBF, all the FTX, all that stuff, unwinding crazy stuff, this seems to have been one of the more stable periods for Bitcoin. It's kind of been in that $15,000, $16,000, $17,000 range for longer than I remember, or maybe I'm just have been expecting it to do something. But
one thing's funny is when you go and look at it, it looks like it trades sideways and then it takes a step down, and then it trades sideways and takes a step down. It's almost, I don't know, like maybe it's trading around whole numbers or something like that. I didn't look that closely. I just sort of eyeballed it and thought it's a funny kind. It has a very tight trading range and then it breaks, and then a very tight trading range and then it breaks. Which is different behavior to what it's had before. Like maybe it is stabilizing. Maybe that sort of indicates that it's more useful as a unit of exchange rather
Store
than
of
just
currency or store of value.
maybe it's less of a trading sardine and more like a currency. Yeah.
What will be the price
good for
of
it.
gold in 1 year?
Big double
Currently-
top. Big double top
Currently
on Bitcoin, by the way.
$1,877.
Target price should be 0. Gold?
Yeah.
What have I thought?
1877 right now, dollars.
Yeah,
per ounce.
I'll say 37.50.
Whoa.
Yeah, Jake, you should be giving your predictions too.
Okay, I'll run through all
Jake.
mine at the end just
You're
to
gonna go
for,
through yours.
yeah, just to crystallize. But
Yeah, but
it's
you
fine.
like thought of this. I have not.
In fairness, I sent you a week
Oh,
ago to like,
Yeah,
hey,
I
here's
know,
all the
but
questions we're gonna talk.
yeah, but I have not prepared in the past, and I'm not about to start.
Don't you are you're the Cal Ripken of.
Let's go 1300.
Do you have
Okay.
is oil coming up here? Because we've got some oil predictions coming in too.
What will the price of crude oil be in 1 year?
Oil's been I don't really follow it that closely, but it's been I've like you're aware of it at extremes, right? So I remember it when it went through 0. I reckon it's 200.
It's currently at 75. Call it. So just FYI.
Yeah, but that's an SPR adjusted 75.
Yeah.
200. Yeah, that's my prediction. 200.
200. Jesus, what a world are we living in? Toby?
Like if you don't know, you got to go to the extreme, right?
True.
I'm gonna go with
Yeah, when you don't, what are you saying? 75.
yeah.
So yeah, when you don't know, bet against the base rate. That's what
I think between 60 and 80 is my real answer.
All right. What will be the best performing major financial asset over the next year? So
US small caps.
Okay.
Oh, please. Just the I forgot to mention when you're predicting commodities, the best prediction for a commodity price 12 months ahead is the current price. And the reason is that it minimizes your error like up because you got no idea. So that's generally the best prediction unless you get it to
This
an
would be what I would say
extreme.
for everything, by the way.
Yeah.
Well, unless you get it to an extreme and then you get the mean reversion. So if I was like if I was being statistically smart and a betting man, I'd be betting the current prices for everything for the year ahead. So let's just like I'm not going to say those things because that's boring, but it would be nice to track that as like that's the market. Do you know what I mean? Or that's the base.
Yeah.
Do you know?
Base rate is whatever it is today would be if you were a know nothing.
Yeah. If you're well, it's statistically it's just the smartest thing to do if you're statistically inclined.
Too boring for media though, so let's get a little crazy.
I reckon.
What do you think?
I'm going to say emerging markets equities and particularly emerging markets value. Emerging markets small value.
Oh, all right.
I think the thing that has been most beaten up over the last decade is probably the thing that turns around hardest over the next decade and probably starting this year.
Until everyone dies and there's no terminal value in those.
Whoa.
Cheery.
I would take junk debt too.
Yeah, that's probably in there.
All right. I'll add that as all right. I'm going to lock these in now. You all happy? You're happy with what it is? And then I'll reveal what mine are.
Yeah,
no, I'm not happy with these. These are garbage.
All right. Here are my answers just for fun. Dow Jones 29,500. Total return S&P 500 minus 15%. US 10-year 4.5. Rate of inflation 6%. Bitcoin 14,000. Price of gold 22,000. Best performing asset class energy.
Interesting.
Maybe.
Sober.
We'll see.
Sober.
US small cap. Get ready.
Rocket ship.
I'm serious. Small cap. Small is beaten up in a big way.
Small does look like a coiled spring to me. There's a lot of they're a lot better than they're being valued at the moment.
Does that rhyme with 2000?
I think that they're trading at global financial crisis levels, which last I checked, this isn't that.
I meant more the very like still generally expensive broader market, but very cheap, like small versus large, which was one of the characteristics of the 99 to 2002 timeframe.
Yeah, I could see that. I could see large not doing so hot. I could see the index not going too many places and small doing pretty darn well.
I want to do another little prediction. I'm gonna double down on I still think that if we like just at the end of last year, we traded down 20% year on year. I got 2 crack jokes out before it traded back up again. So I want to make more of those crack jokes. So cracks that are appearing in the market. I think there's a reasonably good chance that we do see another dip because we're about 12 months into. So the dip started, right at the end of last year, right at the beginning of last year, like day 1 of last year. And historically, they've run 18 months to 2 years, which means that, and we know that the first 2/3 is about 1/3 of the drawdown. Last third is 2/3 of the drawdown. So that would mean that we're coming up now on the action,
the final act 3 of the play.
So that means either, well, it's 6 months to a year, right? That's the 18 months to 2 years. So this year, I think this is probably if this is like a 2000, 2002, 2007, 2009 style mega bear, this is when you see it. This is when it gets really crazy. So I still think that there's a good chance that happens, but I don't know what the catalyst is. I don't know what's going to cause it. So this is one of my topics too. I don't want to like gum it up too much, but Cam Harvey, it's related. Cam Harvey, who wrote his 1986 PhD dissertation on the 10-3 yield curve inversion. And he used data going back to 1968. And I don't know how many yield curve inversions there had been before then, but
sounds like some elite ivory tower loser.
He's an academic at Duke.
Yeah. What does he know?
Here's the funny thing, dude. So he wrote the 10-3 inversion when he goes back through 1968. It's that 10-3 inversion has preceded every single recession. And if you get a crash in a recession, that's a much deeper crash. That's like a 40 to 45% drawdown peak to trough. And then since his paper came out in 1986, there have been 4 more. And in each instance, it's led to a recession and a very big drawdown. He has come out recently and said that he doesn't think this current inversion is meaningful and he doesn't think it'll lead to a recession. He says sometimes
soft
the models
landing,
are wrong.
Really?
Part of one of the things that I've written about.
What was his reasoning? Did he say any
he's got a variety. One of them is that he says inflation adjusted, the yield curve is a lot flatter than it appears because he says they're real numbers. I've just got someone blowing up my phone here, so I can't look it up at the moment. But
the inflation adjusted yield curve is new. I haven't heard of that one.
Yeah, I wasn't aware that was a thing either. But he said the first thing on his list was the labor market is tight, and everybody knows that I don't know what the O and the P are. Thank you for everybody who sent me the email telling me what the O and the P are. I do know what they are now, orders and profits, but it's not relevant because the H is the one you have to worry about. That's housing. That's the first one to go. And then the E is the one you have to worry about on the long side, because when employment cracks, that's typically lagging. The first sign of the recession. It's the beginning of the recovery. Yeah. And he lists that. He says labor tightness, labor market tightness, and tech layoffs, because he says tech tends to be people who get laid off in tech get rehired again really quickly. So there's not a lot of slack there. So those are his top 2. Why this is not.
I don't know if that assumption is going to hold water this time.
Which part?
I mean, I'd argue if there was any fat to really be trimmed from the system, it's probably the number of tech employees that have been arguably overhired to juice growth in the name of chasing revenue multiples. I'm not sure all these companies need to be this size.
That's what I look at the numbers that they have. I look at the numbers that they lay off. They're astonishing. They're so big.
Yeah. Well, I mean, even the small ones. My buddy said in 2019, he said CEOs were just hiring engineers that they didn't need to show growth because that's how you recruit more engineers, and your engineer growth drives your valuation. And they were all trying to get rich. And guess what? Then 2020 and 2021 happened and they all exited. So they played the right game.
Yeah. Yeah.
Pretty smart.
That bag now.
Yeah. But I give them credit for identifying identifying the way to exit and then exiting nicely.
Yeah. So I think that what all that means is that what I was going to say before, the inversion, there's this theme that I have written about in my books many, many times is this idea of simple models tend to outperform expert judgments. And I think this might be another instance of, like, this is the problem. We all want to fade our models all the time. We all want to correct our models, thinking that we can add to them. And I just wonder if this is an instance of Cam Harvey. He's an expert, there's no doubt. And that model is a very good one. And here he is trying to fade his model again. I just wonder if it's an instance of an expert trying to override a simple model, because he makes the point. It's a very, very simple model. It's a one
factor
variable. Yeah, it's a one variable model, one factor model.
Yeah, what's that? I think was it Grove, I think said in, or maybe it was Meal, but one of those guys that did like a meta-analysis of all these simple models, and it was the simple model represents the ceiling, not the floor, compared to when you add the human element.
And the golden rule is that simple models outperform experts, even when experts have access to the output of the simple model, because we just detract from it. We can't help it. Just wonder if this is an example of it.
You should write them.
Yeah.
Like, look, I'm just saying.
I don't want to
I've written some books. You've written some papers. I think you're wrong. Don't override your model.
I don't want to argue with him though. Like, he's got good reasons. Who knows what he's.
Twitter, put him on blast and tag Toby.
Don't do that.
Do it.
He seems like a very nice man.
A very nice man that overrode his model.
Who knows? Maybe.
Hey, we've all been there.
Yeah.
Cardinal sin.
Which means that we can get a big crash. It still might be on the books, but who knows? I'm not changing anything I do as a result. This is all just an academic kind of. This is just all bullshitting between us and whoever else is watching.
Yeah. We should figure out how to like tell everyone that the crash is coming and market that, like Robert Kiyosaki style.
Oh,
I bet it would drive a ton of people to our channel, which is what life is really about.
Yeah.
And then sell them gold commercials or something like that.
One other point.
This guru bought Amazon at $1.
That's right. He sold it at $1.50, but he bought it at $1.
Don't worry about that.
That's why you need to be David Gardner. Just buy a little bit of everything and just let it.
Careful.
Hold on.
Careful now. He held on to and added to Amazon. I will give him credit to that. I don't disagree with you. I think their marketing I have some issues with. I don't know where the lines are anymore. You know, the longer I don't know, man.
Yeah,
like
you do.
I said, no, I don't know. Like I give these guys credit for, over hiring and then exiting and then some stuff pisses me off and other stuff doesn't. I don't know where like my line is. I do have an issue with people that have built a brand in one field going to another and using somewhat sleazy marketing. I don't mind if the sleazy marketing is inherent to the way that the business started, if that makes any sense.
Oh, as long as it's sleazy from the beginning, you're okay.
Correct. Yes, because it's consistent.
Foundationally sleazy.
Yeah. Because you're not flip flopping in that instance.
Yeah, give me the straight sleaze.
Yes,
one of the things JT and I were talking about before we came on, which I just want to add to what I was saying before.
But real quick, is that consistent or is that stupid? How I'm thinking about that, like, I don't know. Straight sleaze, at least I know it's sleaze.
Yeah, be authentically sleazy.
Be honest with your sleaze. Is that what you're saying?
Yeah, I think so.
That's the difference between bullshitting and fraud, right? The bullshitter, that they don't believe what they're saying. Fraud is like they're trying to trick you.
Yes,
persuade you.
That's true.
Somebody wrote a book about it. The only point that I was going to make was that in 2000 and 2002, this is what JT and I were talking about before we came on, the market was massively overvalued and had that terrible crash that lasted for a really long period of time. But value, stuff that was undervalued, did really well through that period. So you could have been if you were a stock picker, if you're a value-based stock picker and you were looking at the index as a reason to be in or out of the market, you missed like what was a generational opportunity. So you need to be careful watching big macro stuff. I know I talk about it all the time on this because it's kind of, I don't really like talking about single names. So that limits the amount of stuff I can talk about. So I prefer to talk about like bigger macro ideas. But I do think that you can, if you find something that's undervalued, it really doesn't matter what the rest of the market looks like. That thing's going to, even if it trades lower after you buy it, if it's undervalued, you should buy it. Don't worry about it. That's not investment advice. Just my personal thought, talking to myself.
Yeah.
Right. Tend to agree.
Wisdom is following your own advice that you tell other people.
That's following your own simple model, right?
Yeah.
There's a lot of stuff that's bounced pretty hard. A lot of stuff got pretty beat up in that last month of December.
Do you think that it's sorry?
Oh, go ahead.
Well, I had the. This is another thing we were talking about before we came on. But do you think that the flows to something like ARK, which I think is kind of representative of the bubble that we went through, like the flows to ARK have been incredibly strong over the last 12 months. Like they've not dipped at all.
I've never had an opinion on this, and I'm not going to start.
Oh, come on. This is a podcast, sir.
I mean, look, I don't know. I mean, I think some of those people are maybe doing the right thing. Two, I don't understand how the hell that entire investment complex is structured. I mean, but I never have. Right. And like a lot of those things are up, if you go to the top, they're down a ton. But if you go back to 2018, 2019, they're performing pretty well. So, I don't know. Is this before the crash when they're all screwed, or is this like just kind of a sell-off that you got to deal with, and you realize now you get 70% forward returns? Who the hell knows? I wouldn't bet on it.
Oh man, I don't know the compliance how they do that, but
they don't have compliance. They ask for
where we're
going.
Not we
permission.
Don't need compliance.
That's right. They're in the future with ChatGPT as their compliance.
Do you know who did have a good year last year? It was Berkshire.
Yeah.
Yeah.
How does he keep doing it?
So I'm looking like ARK K, the main one, I think it is it's flat from August of 2017.
Ooh, that sucks. It's perfect buying opportunity.
That's a pretty far round trip.
Well, do you know how much innovation has gone on since then?
It's more than 5 years, right? Is that 5 years? 18, 19, 20, 21, 22. Yeah.
I got to take my shoe off to get to the numbers that
Uh-huh.
I can do it in one hand.
Okay.
Yeah, boy,
I was counting with my fingers. It was just,
and I don't think there weren't a lot of dividends, I don't think, coming out of that portfolio either to worry about, right?
It was very low dividend. I had to like manually put the dividends in when I was doing the forward return calculations that I do. Because if you put in zero, it refs out.
Yeah, that's nuts. Well,
I don't know the answer. I mean, it is. I've wondered if it would be a useful model for everyone to think about something that Munger said in the 94 meeting. And he said, Buffett at that time said, you don't have to earn it. You don't have to get it back the way that you lost it. And Munger pointed that out as being very wise advice. And I wonder if that would be good for us to hear right now as well. Like, if you're trying to like buy the dip in things, or if you lost something and maybe there's like a chance to trade up into something else. And even just sort of like, if you had maybe tipped a little bit more growthy earlier and thinking like growth is where you need to stay, maybe you don't necessarily, I don't know, but just trying to evaluate the entire opportunity set as cleanly as you can without any kind of recency bias and anchoring bias to what had worked the last 10 years, let's say.
Yeah,
that's good thought.
It'd be interesting. I don't know.
I like to say a lot of this stuff initially, so I've got cover when it actually happens. But I think you need to be able to buy stuff that you think is undervalued and then sell it lower because you've got better opportunities to put in there. And it was not a bad decision when you bought it, because that's what the auguries indicated. Whatever you look at, the entrails were pointing in that direction. Entrails are pointing in a different direction when you rolled out. There were better opportunities around. The shoulder bone cracked in a particular way, and that's when I threw it in the fire. That's why I went that
tough
way.
to sell 5 PE to buy 2 PE, huh?
I mean, I would love that opportunity to do that. I don't mind doing that.
I think you're kind of rare in that instance, though. I think there's a lot of people who are like, this is too cheap to sell, even if there is something else. Like, they just feel like they know it better. And a lot of times you're like, I've already done all this work on this one. Yeah, I mean, it's really easy to get sunk cost bias happening.
I've wrestled with it for a long time, and that's why I say it up front, so I can do it with impunity. Is it Buffett who says, like, develop your eccentricities when you're young, so it doesn't look like senility when you get older? Same kind of theme, trying to do that.
Yeah.
Did you said that the 1990s Berkshire Hathaway meetings, that's the best vintage if you're looking to go back in the late 1990s? What years are you saying through there?
Oh, I mean, probably 94 through 2003 would be premium, just because of, you get to see a bubble forming, you get to see a bubble bursting, you get to see how they managed all the way through that. And especially in the early years, the quality of questions from the audience are just really high, and Buffett and Munger are just absolute peak performance. Like, they're in their mid 60s then.
Yeah.
They're sharper, they're faster, they're funnier than even today. It's really special content, I think, and just a special time in history to have those guys at their peak during a generational bubble and a burst, and just to see how they handle it in real time, and how that their attitudes and what's important to them at different periods of time. Like, I just don't think it can be replicated by much, and especially content today, even, I don't think can be it's probably just not as good as that.
I think it's a consistent theme when you go back and look at bubbles that have formed, is that each time they form, everybody thinks that, like, that idea of the permanently high plateau, that was like, was he a Fed chair or whoever said it in 1929? Do you know, you know that comment?
Fisher. Yeah.
Fisher. Who was he?
He was an economist.
Just an economist. Okay.
Yeah. But a very preeminent economist at that time period. Like who would be the equivalent today? Maybe
Krugman.
Yeah, maybe Krugman. He was well known.
Who else is out there as a well-known economist today? Like Nouriel Roubini, somebody like that, Dr. Doom. Who else?
Thankfully, there aren't a lot.
Roubini got the Dr. Doom moniker because he kind of predicted 2000, and then he's been right once in a row, and that was enough.
He's been riding that ever since.
He was all around in 2008. But
if you get a prediction right, you should never make another prediction.
Facts.
Because then you blow up your reputation. From there on in, you just like how I did it on the World Economic Forum speaker circuit.
How I did it.
How I predicted it. And then Taleb, I guess, as well. Like, didn't even predict it. Got credit for it. 2007, 2009.
He made money. That's all that matters, right? I don't know if he made money. I don't actually study him at all, even though I know I should.
I could be wrong about this, but my understanding is that I don't know if because of it took so long to play out, but that he kind of shut down right before the fireworks actually, like the big paydays would have happened.
That's
and then Spitznagel is the one who
was his head trader,
cashed all the checks basically when it did.
Mm-hmm.
Spitznagel's first month was June 2007, and it was like 100%, and then he was off to the races. And Taleb had been like holding out. Michael Big Short, who's the author
Lewis.
of that? No, sorry, Lewis. Thank you. Yeah, Lewis wrote I think Lewis or maybe Gladwell, somebody wrote an article about him called The Blow Up Artist, and said the only thing that could happen is he could bleed to death. He couldn't blow up. And it was all about how he was like, I just think it just got to him. I think it's tough to be, now that I've sort of seen it a little bit closer, I think it's very tough to be a blow up guy, a tail risk guy, because I think that there's, the market is really, everybody interested in the market conspires against the guys who are the blow up guys. Like, they don't like to see blow ups.
You also have to be like, when that opportunity comes, you got to capitalize on it.
You got to have it on.
Yeah.
Got to have the trade on. Yeah.
Yeah. Not I guess what I'm saying, and I think we're saying the right thing or the same thing, but like you got to have the right trade on. I think there are a few of
Yeah.
those vol guys that like were kind of prepared and then didn't execute.
Well, I think
look
that
what's happened to them this last year too. I mean, if
yeah,
a slow meltdown does not trigger tail risk insurance, and you just bleed premiums, even though you could have a. If I told you that the S&P was going to be down 18% last year, you would have thought some tail risk guys probably got paid, but they didn't.
oh, and you're down when the rest of them, like the hedge is down with your long book down. People are just like, what are you for? You lost me money during the good times, and here we are in the bad times. Because we haven't had like that was one thing that characterized last year, right? There just wasn't that. I didn't feel like the terror of like March 2020. That was,
Yeah.
you know, I could feel it in Twitter. I couldn't feel it this time around. Nothing happened last year.
Yeah. The punctuated experience of a real drawdown in a short period of time.
But then I think that's the mistake that everybody makes. Like if you go back and look at 2000, 2002, first 12 months was down 20%. And then the fireworks started 2007, 2009. I mean, not quite 20%. It was like 19 point something also 2007, 2009. And then the fireworks started. Same thing this time around, not down much. It doesn't indicate that it's over. Just these are the conditions that you would see before the fireworks starting.
Is that the eye of the hurricane?
The eye of the hurricane.
I don't know.
Trademark.
What don't you know, Billy?
I don't know. I
it's not predictable.
No, I know. I just think I think the hurricane has hit small. That's what I think.
Small caps.
Yeah.
Why did it miss everything else? Well,
I don't know that it missed everything. I mean, there's a lot of stuff
fair.
down
There's
50
a lot of
to
carnage
70%. Like
that's
it
true.
just
That's true.
Why hasn't the index sold off yet?
The index has, like, to some extent. 20% is a lot. It's only 16 now, I think.
Boy, 60-40 portfolio last year. That's
crushed.
You use TLT for the bond part of it. I mean, you're down 23% last year, which is.
But you were up a lot in 2020 or 2021.
It's just,
I mean, you know,
the person would have thought 60-40 is supposed to be this kind of relatively hedged, relatively safe.
Look, until it's sold, it's all just fancy pixie dust anyway.
What about leaning?
All right? You can't spend your investment account until you sell that shit and pay your taxes.
You're supposed to do that thing with your age, so you like as your age goes up, your bond allocation goes up. Like those people
100 minus your
smoked
age
as well. Yeah.
Yeah. Well,
they got more smoked. I mean, I don't know, more.
That smoked.
They got one chance to cash out at the top.
That whole heuristic was, I think, developed over 40 years of bonds going from 15 to 0. So those like adages are born from those type of.
It's weird, isn't it?
Long
the basis
tailwinds,
of these things.
Yeah.
They're often very short.
It's odd to me that interest rates declined at the same time that boomers aged and got spending power.
Do you think that it's like that big cohort? Somehow it reflects that they've been in control of the whole, interest rate. Like it reflects them investing and them taking money out.
I don't know. I really don't know. It's odd to me because one of the reasons that I don't think that rates can go up is I just think there's so much money sloshing around and demographics are so fucked that I just don't know how you get yourself to the true economic growth. I think is going to be really, really hard. Now, maybe that ends up causing people to cling on to their dollars. And maybe then because there's not growth, you have to offer them a higher price to part with them. Like maybe that's how this works, but it's just odd to me. I would have thought, yeah, maybe, but I don't know. Peter Zeihan was on Rogan yesterday. And I don't know. I like his book. I think it's interesting. And it jives with, whatever demographics. Demographics are totally fucked. I mean, look at the age of China's population, and then look at the age of basically any developed country. And I mean, there's going to be a lot of keeping boomers alive. There's going to be a lot of money in healthcare to life extension. But outside of that, like, you're going to have to replace a very big slug of people with a very small slug of people. It's part of why I don't really want to be long commodities. Like, at the end of it, the operating leverage could get really ugly to the downside. Now that's, probably beyond everybody's investment horizon, and who cares, but operating leverage going the other way is not a fun thing to deal with.
I saw an interesting tweet about, I think it was from Jesse Felder, and it was about how kind of hyper optimized a lot of US corporations have become. So like thinking about GE or, with Southwest, and maybe not investing enough into their computer systems to keep them up to where they don't crash like they did.
With the airlines. Yeah.
Yeah. So this, just in general, this focus on optimization of US businesses, I was wondering if that actually could be somewhat of a deflationary force. So, like when you're under investing in your business, like you look like you're earning more, your costs are actually higher than they are, but just because you have a bunch of delayed or deferred liabilities in, technical debt, in bad relations with employees, potentially, like all these things are sort of like on the balance sheet that were under recognized. And these fragilities are revealed in times of stress, like we're experiencing. And all of a sudden, maybe like that becomes inflationary if you have to like catch up on all of your stuff that you were under spending on.
It's not only that, it's this big companies use their wage employees or their frontline employees as like human shields. Like they do all of this stuff to make it less, like to reduce the experience for all of the customers. Like the airlines are a great example. And then who do you complain to? Like you're complaining to the stewardess, or I don't know if that's the politically correct term. I don't know what you're allowed to call them.
Flight attendant.
Flight attendant. You're complaining to the flight attendant. Like that person doesn't get paid until the door of the plane closes. That sucks. That's the wrong person to be complaining to. But who do you can't get through? You want to get on a line to complain to someone? No, like I think it's awful. I hate the way they do it, because the decisions are made by people who don't bear the consequences of those decisions. Thanks very much. Someone gave us a tip here. Thanks, Omniscient Cat. Thanks for it. It's very kind.
Thank you. We'll put it in the market. It'll go to zero.
I'm going to put that in some vol calls.
Yeah, that's right.
Make some money out of it.
That's right. Black Swan.
The thing I was saying before, that every single peak there's somebody there who's saying it's a permanently high plateau. Like we always seem to think that technology or like modernity has somehow allowed us to escape from these like market forces. And it's just like, even this last one, it just amazes me every single time everybody thinks that mean reversion is dead. The market doesn't work anymore. It's a permanently high plateau.
On the other hand,
we're proven wrong every single
disruption,
time.
bro.
Well, no, on the other hand, like a lot of those quality stocks, I mean, they're down, but they're not down that much. I mean, I don't know that you would have, I mean, I just told you, I sold them. I mean, I'm plus 4%. I think it was the best timing call I possibly could have made. Like, I don't know. How much does that fucking matter? Like, now obviously it was super low basis. And one of them, I think it was Merck, ripped. So that kind of screwed my decision on the, backwards looking. But like, I don't know. I haven't gotten the impression that, I mean, look, SAS and some of the growthier names destroyed. But I don't know. My beloved Curate, rest in equity, peace. I mean, there has been a lot of places that got blown up, but I don't know. I'm not sure. I guess expensive got hit harder, but real estate around here is fine. Like I just saw average transaction prices are 11% higher than they were last year.
Wow.
I know the end of the world is coming. I get it, but it's not here yet.
Is that so the same thing is happening here, where it's been selling off since like September or something like that, maybe a little bit earlier than that. But because the bump was so high from the start of the year, it's still like plus 6% year on year, even though the drawdown is like 7% so far. Do you know what I mean?
Yeah, it's probably plateaued or peaked or whatever, but
There's
I don't know.
There's that bump making its way through the snake in everything: commodities, stock markets, real estate markets. So I think real estate's just really sticky. It takes a long time for it to show up. It's hard to transact. You can't just bounce out of the house the way you can tip out your stocks.
Yeah. I mean, the other unique thing is Fort Myers and Naples helped the situation for those that did not get hit so hard by hurricanes. So it's a little unique. Like our rents went up year over year, which is kind of nuts. But I think it's people that would have gone to the West Coast are no longer, they're looking for somewhere to go.
Because there is a big real estate drawdown going on. I mean, I get news articles fed to me like that all the time.
Yeah, and like fucking Boise. Who cares about Boise? Boise
Vegas.
sucks. I mean, Boise doesn't actually suck. I don't actually mean that. I was watching Joakim Noah talk about Cleveland, and they were like, "Do you regret what you said about Cleveland?" He was like, "No, Cleveland sucks. Like I've never heard anyone say that they're going to vacation in Cleveland." I thought that was funny. So anyway, that's where I pulled the Boise thing from. But I don't know. I think some of those tertiary markets definitely getting hit, but I don't know, man. Quality. I think assets for the long term is something that maybe it's the wrong lesson to learn, but it's one I'll probably stick with.
It does seem like it's kind of
indexing
a FIFO experience, right? It's like first in, or LIFO. I mean, last in, first out when it comes to those kind of bubbly areas.
Yeah, well, I'll never forget a professor at Auburn. Somebody was like, "Oh man, it's so cheap to live here," and the guy's like, "Yeah, no one wants to."
But he did.
Well, I think he got paid a reasonable amount.
Should we take some questions since it's been so long?
I've got one. Where do you want to buy Tesla?
Next.
That was a question. That was a question from the crew. Let me look at where it is.
Yeah, what's the market cap right now?
I asked a question on the Twitter machine. I messed up how I asked it, but I said, like, what is the economic case for investing in self-driving?
Revenge.
The amount of answers that I got, like the one that makes sense to me is if you believe that the world goes to local monopolies and there's a data advantage, then you can harvest the economic profits. I don't know how big of a fleet you need. I don't know what your cost on your fleet needs to be. And I don't know what your discount rate that you're assuming is. But like so many people were like, "Oh, well, people won't die. Insurance will go down." Like almost all the answers did not explain why money will be harvested from this. It's just like why it's a benefit to society.
Yeah.
So I mean, I don't know. Like I do not trust Elon
Consumer
Musk.
surplus versus producer surplus.
Correct. Yeah. I just don't trust Elon, and I don't understand it, and I don't understand where the galaxy brain has the equity. So I will continue to let everyone else make money, and I will stay poor.
Has anybody had that kind of demolition of their reputation the way he has over the last 12 months?
He bought a social media company. It's a terrible idea.
Ooh, you said that a long time ago, Bill, and I think that was right.
It's the
why would you
easiest way to
ever
be
want to
hated.
deal with First Amendment issues?
It's so stupid. He's not stupid, don't get me wrong, but that decision is a great way to have people hate you.
Because I don't know what the value of Twitter is, but LBO Twitter at 44 billion, where you're like already negative on the interest payments, like every single bad deal from the peak of every single stock market crash has exactly that kind of deal in it, where somebody way overpays, where the flows don't pay the interest on it, and people
Is
just
this
like,
AOL
why?
2.0?
I mean, well, to be fair, AOL Time Warner was that was a stock for stock deal, so that the AOL gentleman, whose name is just escaping me, could ride off into the sunset. Case, yeah, that was a brilliant deal for Case.
Oh yeah, of course.
Case did a good job. Nobody else did. But there's always this is a financial transaction. LBO is a financial transaction. I don't know.
I mean, look, at the end of the day, you have to be comfortable getting in bed with Elon if you're going to buy Twitter or Tesla. And like, I'm not
Doesn't
there.
He have 12 kids already? What do you?
Yeah, but you know what I mean? Like you are going to depend on one man. Without him, that whole equity
Who is a little
falls
distracted.
apart.
He has a few other things to do.
Yeah.
SpaceX, Twitter, the Boring Company. Like that's huge.
I'm sure he's not running. I mean, he is running Tesla, but I get the
The one
sense
where they
he's
put the wires
probably
into
in
people's
the
brains.
capital raise.
Neuralink.
Neuralink. Look, if technology goes that way, where you got to have an operation to get wires put into your brain, I'm just going to let technology go on without me. I'll be back here in the real world using my hands to open doors like an idiot, but I don't want wires in my brain.
What's the next question?
Why is Twitter connected to the fundamentals of Tesla?
Well, because you're banking on a key man, and that key man happens to be incredibly distracted, would be my best answer.
Samson says that Bill Miller has a short on Tesla. That's very un-Bill Miller-like, isn't it?
Oh, I heard Bill Miller's portfolio is really something. Somebody said that we should talk about it. What did he say? He's long Coinbase, Silvergate, Amazon, and Bitcoin.
Wow.
And short Tesla.
Yeah. Well,
I mean, long Coinbase, short Tesla is an interesting trade. There's a very strong statement there.
I've never known. I've never known.
Me.
Yeah. Why would I know now?
I'd rather be short Coinbase and long Tesla if that's my only two options.
Yeah. I mean, if you ask me anything in the car space, my answer is Garrett Motion, right? That's like a company I'd like to own. So that's what a boomer I am. That's it. They make turbochargers. So I'm on the end of ICE.
Yeah.
I'm going to get destroyed on it. The terminal value is 0. It's probably 0 next year. And how can you possibly be in it? I don't know. This is why I have no money.
I think, to be fair to Tesla, I don't think it's a donut because it's generating free cash flow. It looks to me like it's generating free cash flow. I don't know if that's, if you dig into the forensically, I don't know if that's actually the case, but it does appear optically from the outside that it's generating free cash flow. And it's got huge support. So like I would have thought, I said a few podcasts back that maybe Tesla was starting to look a little bit invincible because it's got such a huge community of people who are so, on the message. They love the story so much. Yeah, exactly. And I thought that the big risk to that was something like Musk destroying his own reputation, which now seems to have happened. But I still think Tesla's probably okay. But that doesn't mean I want to buy it at 100. It's like 117 today. And I
don't know. You want to counter trend trade it? You could do that. Moving average, the 50 days at 167. I could see a big bounce. The 100 days at 215, the 200 days at 245. Like
I want to buy it for fundamental reasons. Yeah, it could bounce. Like I don't know about that stuff. I don't know about how that all works, but it's too expensive where it is.
Where
would
the moving
worth
average
50 bucks at 30? I don't think that stuff works in individual names, does it?
I don't know. I think as an exit rule, it may.
I Jesse Livermore looked at it and he said it works on indexes, but not on individual names.
That's possible. They bounce around a lot more. But I wonder if as an exit, rule, it makes some sense. At a minimum, I bet you're spared a lot of carnage. Now that may come at lower returns.
I'm sure Wes has done some work on this with a value in Momo and Meb as well.
Yeah, at an index level, it certainly works. Probably at a strategy level, it works too, but I don't think it works at a individual name level.
Well, there you go. Then we don't buy Tesla, I guess.
Not here. I would love to flip long and buy Tesla at like $20. Wave it into the screen.
What would that market cap imply? What's that like?
It's like a fifth of 40, where it is
50 billion.
There was a dude on Twitter. I'm pretty sure he went by Cadis, and he, if I'm not mistaken, he called like Tesla, like pretty much at the bottom, and then Maxar he called, but apparently got blown up in between, which is not great. But I like the way, yeah, that's the problem. I don't even know if he actually got blown up or not. I just think he got
one of
shat on a lot.
Will be one of the annoying things to come out of this is that assuming that it does crater eventually more, there's someone who will have timed that short correctly and will will take a huge victory lap on it when there's a bunch of dead bodies in front of them that could have easily been them as well.
Right one time in a row.
Yeah, that will be unfortunate when that happens.
I'm just trying to get right once in a row. Like, it's not that easy.
Just one time for daddy.
Yeah, well, that's what I was talking to. I interviewed the guy that goes by Henry Reardon. He shorted Carvana. And I was just like, dude, how did you manage a short? Like, that was because he was short. I mean, he had a short thesis since like 2019.
Whoa.
I can't even figure out long only. I couldn't imagine figuring out short.
You got to stay small, and you got to take your losses along the way and keep it small. Like, you got to keep on selling down or whatever you just got to keep on.
Yeah.
You got to keep on trimming it small.
Risk
you don't want to
management.
You don't want to let it go from 1% of the portfolio to 2% of the portfolio
to 10, which is what happened.
Yeah, that's right. You got to keep it at 1. It goes against you, sell it down to 1. It goes against you, or buy it.
So you just keep like trimming it back to your initial.
You have
position.
to, yeah. And then when it starts going in your favor, then you maybe let it ride a little bit more. But that's time, dudes. We made
did it.
Thanks, everybody.
I missed you guys. It's good to be back.
Likewise, missed everybody. We'll see you